To really understand price action means you need to study what happened in the past and then observe what is happening in the present, then predict where the market will go next. Regardless of what you may think, all traders are forecasters. Just like weatherman, the weatherman knows where the wind is blowing from, sees the high and low pressure system forming over the land, knows the temperature variation, cold fronts, hot fronts. You know what I'm talking about, man? Right. Then what does he do? He will say something like, tomorrow the weather in Lagos will be mostly cloudy, slight chance of shower and possibly sunny in the afternoon. How does he know that? Well, from studying the past data and seeing the current weather situation is at the moment, and this day the prediction is more reliable due to advanced computer models and weather satellite in space. So traders are like that. If we get the direction wrong, we lose money. We get it right, we make money. Simple as that. So everything you are going to learn here is about trying to get the direction right before you trade. Before we continue, let me acquaint you or familiarize you, or let me refresh your brain with these terms we normally use in forex. When you hear long, it simply mean to buy. When you hear short, means sells. And when you hear bulls, it means buyer. Bears means seller. Then when I say the market is bullish, it simply means the market is going up. That's is buying, is going, is trending up, is moving up. Then when I say that's all strange. Then when I say bearish, it simply means it's going down, it's selling. That's that's just. Then when I say bearish candlestick, bearish candlestick is a candlestick that has open higher and close lower. That's said to be bearish. Then bullish candlestick, a candlestick that has open low, that has open lower and close higher. That's simply said to be bullish. Then RRR, the risk reward ratio. Again, let me give you an example. Like if you risk $50 to trade, you risk $50 to place a trade, and you make 150. Then your risk reward ratio is 1:3, which simply means you made 3 times more than you risk. This is an example of risk reward ratio. Okay, to further simplify the explanation of price action, can easily can make it like this. When traders make trading decisions based on repeated price patterns that are unformed, they indicate to the trader what direction the market is most likely to move. So price action trading uses tools like chart patterns, candlestick patterns, trend lines, price bands, market swing structure like uptrend, downtrend, support and resistance levels, consolidation, Fibonacci retracement, level, pivot, etc. So generally, price action traders tend to ignore the fundamental analysis, the underlying factor that moves the market. You ask me why? Because they believe everything is already discounted for in the market price. But there's one thing I believe you should not ignore. You shouldn't ignore major economic announcement like the interest rates decision, non-farm payroll, FOMC, etc. Okay, let's see it this way. If you did take a trade in line with the result of economic news release, you stand to make a lot of money very quickly in a very short time, because the release of the news often tend to move price very quickly, either up or down due to increased volatility. But if your trade was against the news, you can walk away with all your profit wiped out or a loss. And the loss can be huge because the market can move so fast during that period that there is also the chance that your stop loss cannot be triggered. Now, see in this way, if I were you, before I place a trade, head over to this website called forexfactory.com if there's a valid trade setup. But if I see that the time is close to a major news to be announced, I will not enter any trade. There are exceptions where I will take a trade if I see that I can place my stop loss behind a major support or resistance, you know, behind a major support and resistance level. In case you want to trade, if you have a if you have a very valid trade setup, first check forexfactory.com and check for all those red color coded news, and make sure there's no high impact news that is going to be released soon impact your trade. If there's news to be released, you can do these two things. You don't trade until after the news release and wait until market starts trading normally again. Or if you decide to trade with small lot size. Trade with small lot size. The market is very volatile when the news is released. This can work for you or against you. Another one, if you already have a trade that has been running prior to the news release time for some time and in profit, think about moving stop loss tighter or taking some profit off that table in case the market goes against you. Once the news is released, in an ideal case, you would have taken this trade a while ago, and that the current market price is far away from your trade entry price, and you will have locked some profits already. And if the market moves in the direction of your trade after the news release, you make a lot of money. Still back to trading price action. Price action represents collective human behavior. Human behavior in the market creates some specific pattern on the charts. So price action trading is really about understanding the psychology of the markets using those patterns. That's why you see price hit support level and bounce up, and bounce back. That's why you see price hit resistance level and held down. Why? Because of collective human reactions. Again, price action gives structure to the forex market. You cannot predict with 100% accuracy where the market will go next. However, with price action, you can, to an extent, predict where the market can potentially go. This is because price action brings structure. So if you know the structure, you can reduce the uncertainty to some extent and predict with some degree of certainty where the market will go next. Price action helps reduce noise and false signals. If you are trading with scholastic or CCI indicator etc, they tend to give two false signals. This is also the case with many other indicators. Price action help to reduce this kind of false signals. Price action, it actually is not immune to false signals, but it is a much better option than using other indicators which are essentially derived from the raw price data anyway. Price action also help to reduce noise. What is noise? Market noise is simply all the price data that distort the picture of the underlying trend. This is mostly due to small price correction as well as volatility. One of the best way to minimize price noise is to trade from larger time frames instead of trading from smaller time frame. Yeah, see what I mean?